Hello, welcome to week number 43. We are starting with a CFTC report and having a look at the dollar. Looks like some dollar longs covered their positions last week, and that meant that their net position on the euro shorts have reduced a little bit. Again, I flagged that risk last week as they looked like they were very badly positioned and they were kind of squeezed out of the market last week. That'll probably more or less run its course next week. We have the ECB. I'm expecting a little bit of dovishness coming from it. That could probably cause a drag towards 116 on the euro side, and GBP flipped again to positive the positioning as most of the shorts covered and a lot of the longs also added as well. So good two-sided market there. On the euro side, most of them, both sides reduced sort of, where the shorts are reduced a bit more. Other currencies, there's nothing more interesting or nothing new really to report. Aussie shorts covered a little bit. NZD fairly stable, and if you look across from CAD, it looks like some bearish positioning came up there as well. And we are entering a period where it becomes incredibly difficult to predict how market will react to some of the moves. We are moving into end of October and start of November, where the Fed on the 3rd of November is supposed to start tapering. The Bank of England is about to raise rates, and a whole bunch of other stuff is happening. And it makes it incredibly difficult to predict market. We know there's going to be volatility hitting, but there is always the question is, do you buy the rumor, sell the facts sort of situation? So we could see things actually turn out opposite of what logic would be, because positionings are getting squared off. So as the weeks will roll over and the situations come a bit more clear, I will have more clearer ideas about the trades as well. Up until then, I will be probably lowering my exposure in the market until I get more clear-headedness about what's happening and how market is perceiving this burst of inflation. Talking about inflation, we are looking at the 5-year inflation break even, so 5-year forwards on the US, and it looks like we just hit 3%, shy of that. And I think market is about finding a medium-term top from that side. That could mean that USDJPY will have a tougher time climbing from here. So we could see some downside going into next week based on that. Let me bring up actually USDJPY chart as well as a reference. So we've hit 114.68, just shy of the 115 handle, and then kind of started selling off. There is scope that sell-off could continue into lower levels. It is a bit trickier to find the direction. The reason for it going up is still there. Inflation hasn't peaked. I think inflation expectation has peaked, so there's a reason why it could come down. It's a bit more two-sided market. I wouldn't put too much emphasis that if it doesn't drop down 50-60 pips, there is still scope that it could rally another 100 or 200. It's a very momentum-driven market. To the run up to it, there was no secret it's going to happen. But now that we're at these higher levels, it's always a little bit trickier and a bit riskier to start taking new positions. So I will take it on a day-by-day basis just to keep myself safe as well. Next week, a couple of data points I want to have a look at. So the beginning of the week, not a lot I was working with. There's a business IFO climate, but I don't really trade these. Really, the most important thing for me will be the Bank of Canada rate statement. I'll be looking forward to their forward guidance. Are they getting more aggressive? Are they getting more hawkish? If so, I really like to get long on CADJPY again. Even though at these higher levels, I still feel like if Bank of Canada is going to give market some to chew on, we can see those highs again next week. Another trade I'll be looking at is to trade euro after the ECB press conference. To be precise, after the London fix preceding the ECB event. So if I have a look at EURUSD, I've actually marked out some of these on the chart. I'm drilling down to the hourly. If you don't know what the London fix is, have a look. I have a Google or I have a look on my website on speculatorsTrading.com. London fix strategy. Very simple, very precise what it is. And we tend to see extremely big moves in the London fixes after the ECB. So I've singled out a few of them in these blue boxes here. So for instance, here we had the ECB meeting on the 9th of September. Market did its move. London fix, and that level was so key for the market to find another leg lower. That's just didn't happen once. The time before it was And in July, again, we had the ECB here. Market did, algos did the trading as they always do around these central bank meetings. We had the London fix level, and that level proved to be so key for the next leg higher in EURUSD for quite nearly 200 pips. And if I go to the time before that as well, so in June, 10th of June, algos trade the ECB announcement. We got the London fixed level, very critical level for the next leg lower, and the time before as well, and so on and so forth. So that was back in the 22nd of April again, key level. And then again here March and other months as well. I'm not going to bore you with it. Very important. So I'll be trading those live in my own group, and feel free to join me as well. It is it's a really, really vibrant group. It's really important how market moves on a daily basis. I try to explain these things just so everybody's a bit more confident with the macro picture, how it all plays out. Because when you look at the charts seem to say one thing, but then the breakouts might happen another way. But if you follow the macro picture, then you're a bit more calm about things. You don't make decisions based on where price is. You make decisions on what the information feed is telling you. And based on the information we have, next week you're better off trading your euro on the Thursday after the London fix rather than before, because algos and the bots will make it more impossible for you to trade as it'll be a very choppy market. So these are the things we're looking at into next week. We definitely have a good direction for EURUSD next week. CADJPY could see some upside if the Bank of Canada comes through. And apart from that, I'll be very picky about what you trade and what you do with markets. Just tiptoe a little bit. There's a lot of things that can go right or wrong with GBUSD. A lot of analysts are saying GBUSD should come crashing down, but yet it has been climbing for near 500 pips from these lows here. So you really want to pick your fights going into the month end, and also start in the beginning of November. But if you do this right, you should be fairly on the good side and find yourself in profit still. A bit of shorter recap or preview this week. Again, more flagging about the risks. And then as we move on to the next weeks, I will be looking to explore a little bit more on that. Wishing you all